right, good morning, guys. How are you? Vladimir here for the last time this month. So before I say the the goodbye words and wish you the best, we have one great session where I want to follow up on some of the instruments we've been covering recently, and also some news updates, because we got some interesting numbers yesterday from Australia and more to come tomorrow in the US. Before we begin, for those of you who watch me for the first time, my name is Vladimir Ribakov from Home Trader Club, as you can see here, and it's been a pleasure to be your guest speaker, guest analyst during the months of April, and I really hope you found value in all the instruments, ideas, opportunities I shared with you, as well as from my trading style, my analysis style, and the methods I use. If you watch for the first time, live or recorded, then the way I personally work is multi-time frame synchronization. So I love to go with, I'm not a day trader. I'm doing day trading very rarely. So for me, it's more like some opportunities to ride on. And the way I work is I go with from higher time frame to lower time frame. So for example, weekly, daily 4-hour chart synchronization, or daily 4-hour, 1 hour if I want some short-term activity. But I love the synchronization. So as soon as I find a direction in the same lined up in the same direction among the different time frames, that's what I'm looking for my opportunities. And then on the lower time frame, I start to look for the signs, levels, and official signs. Official signs are always coming from the price. Remember that. As much as I love indicators like MACD, Bollinger Band, RSI, for example, there is nothing better, stronger, and more reliable than the price itself. Yeah, that's where all starts. That's where it all ends. All the indicators are all relying on the price. And they get the data from the price. Open, high, open, close, high, low. Okay, so remember that the indicator indicates, price dictates. So quick follow-up on the news. Yesterday we got some interesting data from Australia, and it looks like, look at that, and actual numbers. And the trimmed mean CPI 1.2 versus 1.4 in the forecast and 1.7 in the previous read. Amazing. Consumer price index, the classical CPI. Okay, take a look at 1.4, even though it's versus 1.3 forecasted, but look at the previous. It's a drop since 1.9. Why it's all important? Simply for one reason. It gives us some sort of estimation or anticipation. What will the central bank consider to do in the next rate decision meeting? It's always about that. And the whole business of Forex is basically the money flows from where the traders can gain more profits. And it all goes from how well the economy is doing and what are the rates between the two places. So if they are better in one place than other, you can get better interest rate, right? And that's what contributes to the movement of the instruments. So with Australia basically showing such numbers, the pressure on the central bank would be much smaller or weaker, right? To go and really hike the rates again. Not necessary. The current rate still doing its job. But on the bigger view, if you think about it, yes, CPI is improving and so on and so on. But what does that still mean? If you think about it, the levels are still high. The rate, the pressure on the consumers is still very high. Yes, maybe the pace is slowing down, but the rates are still high and the pressure is still high. So it's a long run game, and it's not only about what will come on the next rate decision, and also what will come on the next quarter and the next year, following the retail sales, the durable orders, and so on and so on, manufacturing and services and everything. Okay? All that would complete the big picture. So the instant impact was, I would say, to see weaker AUSD, at least against the US dollar. But here comes the but again. Remember, it's always the longer term game. It's never the one factor. Okay, so that's it. Next month, no rates hike. It's always how the current situation will keep affecting the numbers, which are beyond rates decision. So with that in mind, I feel good for the Australian people, because if at least they will not go and hide the rates one more time on the coming months or the months after. At least that could be the first good sign that maybe in 2024, or who knows, maybe earlier, the numbers will actually start to drop and improve some conditions for the consumers. So now let's go on the technical view, the follow-up on our euro dollar and gold S&P, and also a new opportunity potentially building up on the CAD franc. That's an interesting pair I have in my view there. So let's start with the where is it? Here, the euro dollar. Yeah? So our plan, as we discussed, and if you missed these guys, make sure you watch the recordings so you understand the whole analysis behind it. So our plan on the euro dollar we discussed here was buy the dips, okay? And we have several important levels on the go. We have this low, and we have the previously broken high that becomes was a resistance, becomes a support, and retested lows. Okay, so we have high, low, and low. Okay, these lows were on the uptrend, on the most recent uptrend. So basically, what we can say, the euro dollar is still holding these levels on the 4-hour chart, and that connects with our analysis from the weekly chart. According to the weekly, eventually the key level that the euro dollar is likely to test eventually is going to be, first of all, here, the broken support that becomes a resistance. Right? You can see this spike broken, retested, becomes the resistance, and the next one on the way, resistance, becomes the support, and again retested. So it's classical supply areas, not just resistances, but also supply areas where the sellers in the previous move down managed to take the control. So these levels are very likely to be retested, and with having that in mind, buy the dips on the euro dollar still seems like the right thing to do. Right, let's analyze the current price behavior. So what does the euro dollar do in the last week? Basically, it's moving in sort of a range. We don't have new highs, we do not have new lows. That's a definition of some sort of consolidation, right? There is no trend. Trend is when you have sequence of highs or lows in the same direction. Okay, we don't have that at the moment. What we do have, it's basically the last 3 highs currently moving down, the last lows are moving up. In a bigger perspective, yes, we do have the trend, and it's still developing. We don't have any trend change. We do not have a sequence of lower highs, lower lows crossing below some daily important levels. So the pressure here is still bullish, and we can use that in one of the 2 ways. So the first way, the classical way, if we got the fact it's holding, it's pretty serious. Even though, as you can see, the start of the week was pretty anti-euro, right? But the recovery is instant. So with that in mind, we have two scenarios here. If it managed to break, retest, and hold, very important to hold, because sometimes these breakouts are fake. Price goes up and all the way down again. Of course, if it doesn't hold the breakout, there is not much to do. Right? So if the range is broken, retested, respected by the buyers here, this could be a very beautiful opportunity to see the euro-dollar climbing all the way to the weekly resistances I just showed before. The second scenario which could happen here is many times this, as I said before, comes like a fake attempt, right? And if this becomes a fake attempt and breaks this rising supportive line, then it could be a deeper correction back to the previous lows we just spoke before. Okay, now these are the two ways of trying to take the advantage of the euro-dollar current price movement. Okay, if it becomes fake, fake means the attempt to break through the highs, which fails and goes below the broken high. Okay? Then if we break the rising supportive line, that could be a very interesting short-term pullback to the next important level. And alternatively, break above this range while the supportive line holds, while the rising supportive line or trend line in that case holds, could be also an opportunity, sorry for my bad drawing, could be also a very good opportunity to look for the further rally towards the next weekly resistances. So to sum that up, the correct view yet, the way I see that, until the trend changes, is to join the trend. And based on the current price movement, we have two options. One, break above the range and hold above the range. Could be good trigger, technical trigger. The other one is a short-term reversal to retest previously created lows and supported area, the area of demand, and from there make the rally towards the next weekly resistance. And so this is what we get from the euro dollar. And according to the price action, right now, these are the two scenarios I would be keeping my eye on to look and to join the buyers. The next one on the list would be CAD. Okay, the reason I love this pair are actually several reasons, and I'll explain what I follow here. It starts with all the way from the higher time frame. We can even start like a monthly chart, even though not required, just to show you what we have here. So it's a massive, massive, massive bearish move with long term. I mean, we were here like 15 years, actually more than 15 years, of making the sequence of lower highs, lower lows. However, with that being said, while the market makes the lower lows, indicator starts to indicate that the next low is very likely will be a fake low, or what we'll have to call here a false breakout, or any of these terms. So we have the signs of bullish divergence while the market making lower lows, indicator starts to make higher lows. That's an indication of a divergence or deviation between the price and the indicators, the mathematical view of the price on MACD in that case. We have a supportive line connecting the lows, one here and one here. But this zone becomes a critical zone on this move down. Okay? So also look what happens with the Bollingers. We managed to break down the Bollinger Bands. They're widening here, right? When that happens, we usually see 1 up to 2 duplications of the Bollinger Band range. So again, it takes us all the way to this zone. So that's from the very long term how the reversal, potential reversal, is building up. Here is on the short term. It's very funny to call a weekly short term. It's shorter than the monthly before. Here we do build a sequence of lower highs and lower lows. Okay? And again, we start to see that while the market is making the lower lows, indicator starts to create a potential of higher lows. I say potential because I can't predict is it going to make a low and bounce, or is it going to make a new low? And then, of course, the whole theory behind the potential bullish divergence is irrelevant. We can't predict, okay? But this is why it's called a potential. So we need to make sure it happens and create. So the low, how a low is created once you have lower lows, lower highs on the histogram, and then it flips. Now it starts to make the higher lows. So this is a sign that the bullish divergence comes in play. It could happen here on the moving average of the MACD as well as the RSI. Okay, so if that creates itself on this zone, remember it's a key supportive area from the monthly with a bullish divergence developing there in play. It's a key zone on the weekly chart, and we have over than 20 candles right on the lower Bollinger Band without a significant retrace upside. Again, usually that's a sign that something big is building up. It might take some time, as we're talking here about a long term, but as soon as this bottom is created, the next rally could be significant all the way to the previously created resistances and supply areas. First one is here. Next one is even higher around the 074 or 75. So once that scenario triggers, we have huge potential there. And to deal with that, that's where I said I love to go to the lower time frame and start to build up my potential trades. So the best scenario would be, of course, if we manage to see the market makes the low, completes the break over the falling resistance line, hold that, right? And voila, we have a beautiful opportunity. For those who love it more aggressive, no problem. You can go to the 4-hour chart. You will see here in a moment also the Bollinger Band. Okay, look on this right, over 20 candles right on the lower part of the Bollingers. Usually when that happens, like in that case, we see the reaction. Here we see the reaction. Here it was a smaller reaction. Okay, but we do anticipate here a strong reversal signs taking place. And for those who like it more aggressive, you can start paying attention to some of the next reversal signs. Fake lows. Okay, so while the market is making low and retrace, it's called false breakouts or fake lows, doesn't matter how you name it. Okay, we'll start to pay attention to the divergences. So while the market is making the lower lows, indicator indicates and making higher lows, boom, voila, you have a deviation between the price and the mathematic of the price, indicators in that case. And when that happens, that is a sign, of course, multi-time frame analysis. It's not just because there is divergence in the 4-hour chart, it's time to buy. It's a combination of the full analysis we did before. Okay, so once that starts to happen and divergence comes in play, you can see RSI on the over sold conditions, and last time it was here. Okay, it was the same scenario. So once it comes in play, we can anticipate the rallies. This would be more aggressive opportunity. Again, starting from the shorter term, potentially to connect to the longer term, and if we manage to catch that sign, it could become, that's where usually smaller risk opportunities become the ones that pay the highest reward. So cat franc catches my eye. It might take some time to develop and complete. We are talking here about 4 hours daily, weekly. So it's not like you need to sit now in front of the computer like, so where is the setup? Now, it's important to understand and estimate the time correctly so you don't watch unnecessary charts when it's not required. Make sense? So next one on the list is the S&P. By the way, guys, if you have any questions, you can ask here in the chat. Just make sure. Yeah, okay, it's open here. Feel free to ask, or if you watch the recording, feel free to ask in the comment section, or just reach me out directly in Home Trader Club. I'm there for you for any questions as well. The next one, S&P. So I spoke about it on the last Monday, actually a couple of days ago. The classical zone we agreed on was this rejection area. Okay? And as we discussed, every rally there should be last rally. We didn't have any rally since, so there is not really like a fake rally, but there is a very interesting scenario currently happening, which could be an alternative to the idea of the rally. What happens here is that the most recent supportive line is being broken, and we start to see lower lows here. And so this is yet the key low. Of course, it was a resistance, and now it's a support. If we manage to see that holding here, then sell the rallies. Rallies could be in like 2 waves or some sort of a range, and breakout of that structure afterwards could be the beginning of the next bearish move. And the reason I am after longer term sells here is because if we go to the weekly chart, as I explained on Monday, I would just want quickly to repeat. Okay? After these 3 waves down and at the moment forming corrective structure, what we see here is that every wave is getting slower and smaller. We start to see some indication of a slowdown while the market making higher highs. Indicator starts to indicate on the lower highs, and mainly we can see that the last previously created high and the previously created high from the uptrend, they're holding. The market at the moment has no issue dealing with them, right? So if that really holds and the 4-hour chart lows is broken and holding, it could go and starts to connect to the longer term, where the anticipation, at least at the moment I have, is to see final one more move down and then potentially to complete this corrective structure on the weekly chart. So that's the 2 scenarios I follow on the S&P. Again, one would be if we get a fake high exactly to the resistance zone I just showed, I will be after sell signs there, so rally and again reversal signs, right? We need to see the lower highs, lower lows created, and the alternative is a bit more aggressive in that case. But if we manage to go and break and hold below this supportive area, right, the market makes here lower highs, lower lows, which could be a fantastic opportunity, right? And then some pullback or some range in this within this zone, and sell the breakout could really be a great opportunity. And the final one is the gold, which, like the euro dollar, has several interesting zones. The first one, previously broken resistance, becomes a support, and this demand area. It's flirting with this level on the last 7 days approximately, but as we know, when such things happen, it is due to make the breakout. And there are one of the 2 scenarios I follow for the gold. So first of all, I'm after buy the dips, and the reason is because I do expect the gold eventually go and make the all-time high. The question is how it's going to happen, and one of the scenarios, which would be for me ideal, if the gold can make something like that. And ideal because it will then retest this zone where the buyers take control. You can see all the spikes. Okay, that's a classical demand area, and retest broken resistance, which is now support, and a rising supportive line. So that would be the ideal scenario if gold managed to create it. Okay, and I will just follow up on that on the 4-hour chart. If that happens, it should look like that. Right now it's ranging, so we did have 2 waves down, some sort of a range. Break below this range could go and finalize this movement. Okay, and if it managed to do so, again, because we cannot predict, we need to follow the price as it creates the movement. Making that happen could go and create for us here a bullish divergence. So while the market will make the lower lows at the price, the indicator will start to create higher lows, indicating that that's it. This correction is about to be over, and we should move further upside. So this would be ideal scenario I would like to see on gold. Not, or less ideal is if we simply go beyond this high, make some new sequence of higher highs, higher lows, and then buy the pullbacks to the rising supportive line is the opportunity to join this momentum and ride it until a new all-time high is created. The reason I say this is a less favorite scenario for me at the moment is due to the risk reward. Because very likely that a pullback in two waves, the first scenario I just showed before, right? This one, just redraw it quickly. Okay, this scenario could provide much better risk reward. We will get it right from the demand and supportive line with the all-time high. It could be much better risk reward in that case, but we need to follow the price. Not the market doesn't care about what we wish, how we draw, and what we anticipate and what we would like. The market will do what the market has to do, and we just need to follow the price and the official price. This is why at that time being, the market doing nothing on the last week. It's ranging in between the 2010 down to 1970, back and forth, creating some sort of a range. These ranges are usually due to breakouts, and every time you got some consolidation, eventually it brings the next big move. Okay, so that's two scenarios with the current price movement that I have on my list that I watch to trade. So this would be the two opportunities, actually 4 opportunities, but 2 on Forex and 2 out of Forex, that would be gold and S&P. Adds up to the ones that we discussed during the months, the pound franc, the DAX, silver, and many others we covered during the months. It should be a very interesting preparation for the months of May, which usually, or historically I should say, is a volatile month. Many times it connects well to some swing moves, so definitely something to watch. So it's been a pleasure. Let's see, there's a question here, I think. Oh, it's a no, it's not a question. It's hello Deep. It's been a pleasure, guys, to be here with you on this month of April. I would like to thank you for your time watching these videos, if it's in live, if it's in recorded. I hope you find value in it, and I would like to wish you and yours all the very best. Good luck to all the other speakers that will be right after me. Enjoy what they have to offer, and thanks to Eightcap for making it happen, because in the last several months there were amazing names here, very talented traders, very smart and knowledgeable, so you can learn from each and every one the way they observe the charts, and everyone has its own touch, its own style, right, to deal with the things and to make the trading decisions. For me, it's multi-time frames. For others, they love to rely on different things and learn from that and combine that in what makes sense to you, what is logical to you, what you are able to understand. The worst thing you can do as a trader is to try to emulate to someone else, to try to be someone else. Never waste your time trying to be someone else. Just what works for you, what is logical to you, what you are able to understand and to follow consistently. Remember, consistency is the name of the game. This is a business of numbers. So it has to be, you have to be like a machine, right? Working purely on numbers, without all the emotions, feeling, rumors, statistics, bad days. Just work with the numbers, with the strategy or methods you understand make sense to you, and with track recording properly deliver to you. And that's the only way in this business of trading. So again, it was a pleasure to be here. I'm Vladimir Ribakov from Home Trader Club, and if you have any questions, I'm there for you. Feel free to reach me out and ask, and I welcome you to our trading club and our trading family. So again, thanks for your time. Thanks for the opportunity, and good luck to the one who comes after me. All the best.